Okay, everybody, good morning. Happy Friday. Going to continue on with the trade imbalance discussion here. Mr. Trump is doubling down on a topic that every economist in the world is against. And there are a select group of people in the United States that are not against that. So let's just drill down a little bit more into the reality of what it means. Try to keep things topical for this channel. Try to keep them current. So I got some charts again. I realized yesterday when I showed this chart, which I'm going to put on right now, that the words were a bit small, I think, on the phone. So I'm just going to show this one quickly. Most of the stream yesterday was on this. Basically, we have gross domestic product. All right, the trade balance or imbalance is a part of this formula. Okay, so we have personal consumption, just stuff that's one-off. It can be consumed in a day, a week, a month. That's the big bar. This is the United States, by the way. Okay, so it's the vast majority of GDP, nearly $20 trillion. Gross private domestic investment. This is stuff that's going to last a little bit longer, and the majority of this is commercial, not residential. Although residential home building, of course, will go in here as well. Then over here, the government expenditures, but this is not all government expenditures. It is not. Does not include interest on the debt. Does not include transfer payments. It's only direct things that should help the economy in the short term as far as a consumption use. Okay, so this includes all the salaries for government employees, which are supposedly, hopefully, doing some services. And again, I'm all about free markets, but there's transitioning to free markets, and then there is the status quo that could be interrupted by jarring policy, let's say. Okay, so thanks, Gio. Thank you for the comments. Yes, Nobel Prize for Trump on economics. Let's forget the Peace Prize. Of course, I'm sure I'm going to come very much back to Russian policy very soon. Yes. Comparing these tariffs to Russian sanctions, which is worse? Up in the air, debatable. If Russia succeeds in invading us and cutting off the Suwalki Gap due to U.S. Deferral to Article 5 and not showing any peace through strength, then I would say that the Russian sanctions are worse. Great quote as well from Friedrich Bastiat. I love this. When goods do not cross borders, soldiers will. 100%. 100%. That's a great one. I need to pin that. Please tweet that at me. I'm going to pin that. 100%. It's very much reminiscent of the same person, I believe it was Bastiat, that said if you don't create a free market, a black one will emerge. 100%. 100% agree with that. Great quote. So yeah, what we're going to talk about here again is the trade imbalance and what it means in relationship to this Project Liberation Day, day after April Fool's, what the trade deficit actually is. Okay, so I know these words a little bit hard to read here. This is the components of GDP. It's just these four things. The fourth one, exports minus imports. The only negative thing could be if you have a negative trade balance, which the U.S. does, and that will take your GDP down. Okay, so I'm going to show this now, as I like to do, over my long-term scale, my chart engine. All right, so I'm going to move back over here, put this here, and there we go. So let's take these off. Let's start here. This is the same thing I just showed you, the snapshot. This is the exact same thing, but now I got over time. Okay. So components of GDP, that first one, the big one, the majority, 2/3 of US GDP, the PCE, personal consumption expenditures. This is household, this is corporate, whatever it might be. But these are things that just day to day, month to month, year to year, these are things that people need to live. It's food, it's energy, it's services, it's yoga classes, it's whatever the U.S. deems that they need to have. Again, of course, when we look at these one-offs, there's always in the back of my mind, and I'm sure it is yours if you're a Bitcoin fan like me, is the purchasing power of the dollar. Okay, that's also going to come into play here because the U.S., contrary to what Trump likes to say, especially if credibility is being lost around the world, the U.S. has a limited number of cards to play. Okay, we like to think that the United States government is the be all, end all, and the full faith and credit in the government will always be there. If the U.S. is backing out of international treaties and indeed trade treaties that Trump himself wrote, for example, with Canada, where there are many goods that the tariff was 0%, and now it's going to be much higher on a weighted average basis, I'll get to that, those cards will run out, okay? Trump liked to say this card game with Zelensky, but the U.S. does not have an unlimited number of cards here. And as China is gearing up for invasion, Russia continues to gear up for invasion of the Baltics after genocide in Ukraine. We're just going to have to see how he handles this. And it's looking less favorable by the day. Anyway, I digress. So there is inflation here, monetary inflation, price inflation, 100%. All right, that's baked in. I'm not defending everything that the United States government does, but this GDP calculation, which GDP has been around for like 100 years, it's not the best. But as I said yesterday, we can use it to rank things. I use it all the time to rank countries to get an understanding of the scale, the scope. The United States still is the largest GDP country in nominal terms, which still, in my opinion, is the best in nominal terms. We thought Russia had the second greatest army in the world nominally, and apparently they have, $7 trillion in purchasing parity power GDP when they only have $2 trillion in actual nominal GDP. I think the nominal makes more sense there. Anyway, here we go. This is the time scale, and we're gonna move into this Trump tariff idea, how they calculated the tariffs from the trade imbalance. We're going to move in there in this video. Okay, so here is the first major part of GDP, PCE. Second one, gross private domestic investment. Okay, so this is new investments all the time, unamortized, just initial payments for stuff, whether it's commercially or residentially. You got this, 5 trillion as of December 2024. This is how that's grown. Okay, fell a lot during the global financial crisis, as did consumption. These are stacked now. Okay, so if you look, I should have done this on the right axis, but whatever. You can see we're at $24 trillion. Actually, over, actually 25 trillion dollars stacked. Okay. Now the third one I'm gonna put up because the import exports gets a little bit weird. It's apparently weird for people in the Trump admin. Government consumption. Okay. Now, as a free market person, I would love for this to come down and for more of this to go into the green and the blue. I would love for it to happen. Where we are today, with things that happen with infrastructure, defense, paying those government employees, all that stuff's going to end up here in the red. Okay, it's just how the economy works. Let's just go back here in the 50s, 60s, 70s. You see that the ratio has generally been the same. All right. So again, if you think you're onto something that we're somehow going to go to an anarcho-capitalist paradise, again, I would love to see it. I really, really would. But gradualism is the way there. Gradualism, not whatever we think is going to happen here with abandoning allies and trade partners. It's the same. It's been the same trend even before the Nixon shock and after the Nixon shock. Okay. General investment, government is a minority. The majority of GDP is just spending on day-to-day stuff, consuming. All right. Now we have the final piece of the puzzle. Now, remember, I told you it's the what goes in the GDP calculation is the net exports. Net exports. What does that mean? That means exports minus imports. And if your imports are greater than your exports, if you take in more from other countries to the inputs in whatever you do in business, well, that's going to take your GDP down. Okay, so here's going to be a negative, and there it is. And it's not huge, but this is where that 900 billion comes into. Okay, so there it is. Net exports of goods and services, negative 900 billion. That means the US is importing 900 billion more than it exports. And this is the whole enchilada. And I'm about to show you a calculation over time that will describe exactly what the Trump team did. And Howard Lutnick, who knows better, says that there are mountains of trade textbooks. He said this yesterday or 2 days ago. I'm off on my time zones always, but he said that there are mountains of trade and expert economists that went into the formulations of these trade tariffs. I'm going to show you exactly how it was done with a simple line on the chart. I'm going to put it on right now. Okay. So what I'm going to do is I'm going to take this gold area. Let's just take it off. And just so you can see it, how small it really is. Let's take off here, here, here. Okay, so we just have this. Looks bigger, of course, now. But this gold area that from the 80s was pretty much always close to zero. It wasn't always positive. See, look, it was negative here in the 50s. But it was positive generally, let's say, generally. Actually, yeah, 70s started to go under. So after the gold standard ended, and we started to go under in 77. Okay, and so it was even before the globalization really started. You know, global Ross Perot, the giant sucking sound, and globalization of the 90s. It was even before that, mid 70s, where it started to go negative. And this is the trade imbalance. Okay, and as I tried to say again and again yesterday, this is nobody's bottom line. This is not on a income statement anywhere. The U.S. government doesn't collect some sort of dividend on this value. If it is true that globalization is something that works and free trade is something that works, and there are always things to tinker and tweak, and again, this is why we're so far from an anarcho-capitalist paradise when we have 250 countries and islands and polities that Trump wants to tariff. If it is true that having cheaper inputs in your final sale as an American is good, then you could expect that this could increase. Okay, I'm not defending it I'm not saying it has to happen. I'm not saying it's definitely great. I'm just saying if we have cheaper labor abroad and we have lower skilled items that we can export abroad, as we have done, well, then this trade balance would increase. See, it actually topped out. No, it didn't top out. It just looks like it did. 800 billion here before the global financial crisis. And then again, huge inflation also made this top out in September. Almost $1 trillion trade imbalance, okay, or trade deficit. This is simply importing 900 billion more than we export. Okay, so no, I do not like John Mearsheimer. We can talk about that all day long, but yeah, the realism idea. Obviously, the only thing he got right, Gio, just a little side comment here about John Mearsheimer. The only thing he got right, of course, was taking Ukraine's nukes away in the 90s. He was correct on that. Absolutely. But his basically sphere of influence ideas here are certainly not correct for global peace. And having a tyrannical, dictatorial neighbor that cannot live with a free democratic free democratic neighbor next to them, i.e. Russia, next to Ukraine, next to Poland, next to the Baltics, they cannot live. Putin and his criminal regime cannot live next to a free country because his own citizens would continue eventually to get outside of their warped propaganda machine, and they would want more. That's the bottom line. Mishheimer doesn't recognize this. He doesn't talk about this. So no, I don't like him. And he's just always on the side of Russia. It's very unfortunate. So here we go. Net exports are negative. All right, they're negative. And remember, if you want to know the full recent number I showed you on the other chart, it's 4 trillion and 4.1 trillion and 3.2 trillion exports. Okay, so United States, this number, all right, reflects here this negative 900 billion. It means that we exported $3.2 trillion worth of goods to the rest of the world, but we imported 4.1. Now, again, that is not a income statement number. It could be aluminum and steel that we're importing, but we're exporting, usually some other software licenses. That's also included in there. There's just there's no rhyme or reason that has to be zero. I'm happy to say that it's fine to run a trade surplus generally, but for many different reasons, countries could run deficits, and it's just there's no definite economic benefit for the government as a profit center to take this money. It's just it's not money even. It's a calculation of trade. It's just the calculation of trade, and I'll show you what would really matter to Americans in a second. But anyway, we're getting to the Trump calculation. Finally, we're getting to the Trump calculation. What I want to do is I want to take this negative number, which again, none of this even comes into play in the trade discussion. The personal consumption, gross private domestic, or even the government consumption. None of it comes into play. All that it comes down to is here. And if I take this negative 900 billion divided, all right, by the 4.1 trillion in imports, I'm going to get a value. I'm going to show that on the right hand now. All right, the value is negative 22%. Negative 22%. This is the, as I'm just showing there, it's net exports divided by imports. You could say it's the trade deficit as a percentage of imports. That's all that it is. Okay, so zero is here. It's somewhere around here. All right, 1976. You can see that we moved from being generally above zero, generally exporting more than we imported, to mid-1970s importing more than we export. And there are plenty of problems in the underlying economy. I absolutely think that for security, America should produce more, onshore more, 100%. 100%. So I'm not all about just the economic numbers being cheap and better and easier. 100%, I think they should do more. But what Trump is trying to do is basically look at this as some sort of a profit center, to where if you make this number zero, if you reduce the trade balance to zero, somehow that's going to make everything else better. It might or might not. But as I said yesterday, if you tax something, you're going to get less of it. Okay, so if you get less imports because you tax them, well, then you're going to get less goods that are going to be your inputs for the rest of this stuff. So there's no guarantee that personal consumption goes up, or gross private domestic investment goes up, or even defense goes up. Remember, I said trust is now being lost in the United States, and they are canceling military orders because of what the Trump administration is doing. So let's go back. This is the net of what the actual trade balance is. And then if we go to the full list, all right, now I got the full list of the actual tariffs. We can see that we're just sort of all over the place. Okay, and what they did is basically take the trade balance by each country, all right, and divide it by 2. Okay, so actually let me go back here. What we are targeting, I should say, what the Trump administration is targeting, is to turn this negative 22% into a positive 11% blended weighted tariff. That's what it is. 11% on all goods coming into the United States. That's the formula. You just divide this number by 2. You divide the deficit by 2. It makes no sense. There's no guarantee that that putting these tariffs on are going to decrease the trade deficit and make GDP go up. That's the point. Make GDP go up. There's no guarantee. So let's just look again at the full list here. We have China at 34%. That means that the trade deficit, with China, as they showed on that chart, in the Rose Garden, was like 67%. Okay, so they put 34. So China's a big one. Canada, Mexico are big ones. I think they're lower. European Union, 20%. 20%. I'll show all this in a second, the reality. 20%. And then they capped it at a minimum of, or I put a floor on, I should say, a minimum of 10% for every single country. So this is what they did. This is the reality. Okay, this is Wikipedia, list of countries by tariff rate. Okay, this is the reality of tariffs. I like to try to make my tables and stuff myself, but I don't have them at the moment. You can easily find this on Wikipedia. This is the world blended average tariff rate. All products, all countries. All right. So if the world is at 2.59%, and this is old, this is indeed old. That's a 2017 number. Most of these are 2021. But let's just say it's 3%. Okay. Trump trying to get to 22% deficit divided by 2, 11% is way off. All right. You're a factor of 4 off of what's actually happening. All right. Australia has a 0.81% on all products everywhere. China, 2.3%. Estonia, 1.39. This is a European Union. Let's go down to the EU average. Okay, so all European Union, they negotiate as a block. It's actually one of the good things about the EU. 1.39% is the block of the EU. All right, the trade weighted average. So we're way lower on all countries, no matter how you calculate it. We're way, way lower than this. Whoops. Way lower. All right. And what they're attempting to do with Lutnick saying that he has a horde of PhD economists with fancy textbooks making these calculations. No, all they're trying to do is put a calculation to tax this imbalance. It makes no sense at all. When you tax something, you're going to get less of it. Okay. So that 4 trillion in imports, remember this number, this line is simply this imbalance at any point in time, 600 billion in deficit divided by the total imports of the United States. Okay, so here, what it's reflected to of year-end 2024, $910 billion, again, just to say it, that's $910 billion divided by 4.1 trillion in imports. And this makes up the GDP calculation. But again, there's so many like caveats and trickle-down effects and things because, first of all, this is such a small component of GDP itself. All right. Trade, free economic theory, just generally the double coincidence of wants, subjective value. People are only going to do something if they deem it beneficial subjectively for them. All right. I mean, I could choose to make my own coffee, bake my own croissants in the morning, grow my own tomatoes. I could choose to do that, or I could trade something I care much less about, which is a euro or a dollar, to buy those things from the retailer who has the complete opposite subjective value from me. He wants the money more Then he wants the tomatoes or the coffee or the croissant. That's trade. It's the same thing on a personal level and an international level. So the fact that there is an imbalance, and there has been from the 70s, we can talk all you want to talk about onshoring American jobs. That's a problem. They should work on it. It's a defense problem more than anything. It's a defense problem for the United States. 100% they should work on it. You know, Mitt Romney was talking about this with Obama. Mitt Romney told Obama that Russia was the greatest threat. And what did Obama say to that? He laughed at him, said he was still in the 1980s. Mitt Romney was correct. He was talking about that back here. All right, now we just roll on without doing anything about the real problem, which is defense. Okay, so this is just it's not even, it's like apples and oranges. It's not related to the underlying thing. And Trump says, well, no companies are going to have tariffs if they manufacture in the US. Okay. But the United States every year has a smaller and smaller role in global GDP. What's the biggest part of global GDP? It's private consumption. So if the United States has a smaller and smaller role in global GDP every year, what's maybe to have, you know, a little bit on balance or on the margin smaller tariff to your American market, some companies in Europe or in Asia can do better serving American customers and getting away from those tariffs or not having those tariffs apply. But on balance, what you're going to see is the credibility of the United States as a global hegemon, as the free market in the world. They're just going to see that as a pain in the ass, and they want to diversify away from that uncertainty. If you got a guy changing tariff policy every week, and I just love how people say they're surprised by this. It's like people saying that they are surprised by his friendship with Putin. Gio, you're on fire today, man. I really do appreciate those questions. Forget the Peace Prize for Trump. It's the Nobel Prize in economics. Why would you set up your business to be geared for the American market when every year this 19 trillion, this is what I'm going to have to do on the next video, is show you how the share of this 19 trillion goes compared to the rest of the world. It's shrinking every year. So this little bit of trade balance, which is less than $1 trillion, Trump thinks that this is like a bottom line that he's going to be able to directly inject into paying down the deficit. When you tax something, you're going to get less of it. You're going to have less imports. It means you're going to have more expensive imports. It means your outputs are going to have to be more expensive, even locally. All right. And then you're going to have the reciprocal tariffs to his reciprocation, which he's calling these reciprocal tariffs. Again, it has nothing to do with reciprocation. The tariffs are here. There's something like 0, 1, 2%. And where is Canada here? Yeah, 2.35. There are products that Trump negotiated that are 0. All right. And so Trump is going well above that with his reciprocation, which is a minimum of 10%. Has nothing to do with the reality of the trade-weighted tariff on all goods. This is the trade-weighted imbalance of the United States. But it's a fiction. It's not, I'll just say it one more time. GDP is not yes, with a greater GDP, it has a greater ability to tax. That's true. But the fact that this trade imbalance might be lower, that United States, whatever their trade with Canada is, it's lower in certain goods and others. And you look at Mexico, it's lower than in other goods. Or you look at China, ordinarily, their trade is lower than China trades with them. None of that has anything to do with making money for the government. It's just there's no tax calculation here. It's purely calling the trade balance like a profit center is a completely made up thing. Okay. So that's trade. Now I want to show you, if we did want to talk about the United States, how's the performance of United States companies and investors vis-a-vis the United States GDP versus outsider Chinese, Canadian, Mexican companies and investors vis-a-vis the United States GDP, there's already a formula for that, all right? And it's called GNP. All right, so here we go. This is GNP. GDP and GNP. Okay, so let me take this off again. GDP, we just looked at, that's gross domestic product. It's all the goods and services that are produced in the United States, all right, including your export trade balance, all right? Net export trade balance, okay? And it doesn't matter if the company is Chinese, Canadian, Mexican. They can be located in the United States producing goods for the United States or even to export. All that is just lumped into GDP. But then we have this thing called gross national product, or GNP, okay? And this is an even older idea than GDP. It only looks at American investors and companies. Okay, so we have this GDP. This is the total now. This total GDP, right? There we go, 29.2 trillion as of December 2024. Okay, 29.2 trillion. If we look at GNP, what it does is it will net out all of the, kind of like a dividend. It's going to net out all of the income that foreign companies got in the United States versus what American companies got abroad. That's also included in this calculation. So you net that out. All right. So you subtract income that foreign companies, foreign nationals got in the United States, and you add in all of the American income that is received, or I should say, that is business done abroad. Okay, they have this, the rest of the world. If you look at that in the Bureau of Economic Analysis, BEA, or on the Federal Reserve, you'll see it's this account's called Rest of World. All right, and they have these payments that you net out. You're going to get a similar number, okay? But if it was below 100%, when GNP divided by GDP, foreigners would be doing better than Americans. But if you look at this ratio, you'll see that it's typically above 100%. And it's not even, again, we're talking peanuts as far as a sort of gotcha on economic numbers. Okay, let's look at the 60s here. It's a little bit, here goes to 99%. Okay, this was a bad year for Americans, 1951. Or bad quarter even. These are quarterly changes, right? So 1951. But generally, 101%. Here's 103%. Okay. Here is one of the highest, 102%. And then here, March 2021, 103%. If this is above 1, if it's above 100%, the gross national product is bigger than the gross domestic product. Americans are doing better vis-a-vis foreign companies, nationals, investors that are interacting with the American gross domestic product. Okay, so we're right back about to 100%. Again, there's nothing drastic here. What would be funny is if Trump's tariffs over the next, let's say, 2 to 3 years take this number below 1. That would be the thing to look out for, where Americans versus the rest of the world, as it relates to American GDP, do worse. And again, when you tax something, you're going to get less of it. So it's possible that this number goes down now. Noam Chomsky. I don't like Noam Chomsky either. I mean, at this point, obviously, he's quite a bit old. He doesn't understand anything about Bitcoin. He tries to opine about Bitcoin like it's nothing, but he doesn't understand it. He doesn't Uh, he doesn't understand it at all. As far as it goes to world markets and Chomsky, I think he's a socialist. I think he's actually branded as an anarcho-socialist. So he has this idea that we can cooperate with things that are not the government better. But then you just get into this goofy. I'm blanking on this guy's name. Uh, so I'll give you opinion of Soul in a second. But Chomsky. So Chomsky basically ignores all the capitalist progress. He also ignores all the socialist failures, and he harps on sort of utopian ideas that we can have a collective socialist uh, society without companies. And I'm blanking on this other guy's name, who's David Wolf, maybe David Wolf, um, who he brings up things like this cooperative in Spain. It's one of the big cooperatives in the world. Uh, you just harp on random anomalies of entities that are supposedly nonprofit but can do a good job. And Spain is not really an economy to be replicated or recommended, and they've had a really long socialist past with Franco, obviously. So Spain would not be my example, but that's people like Chomsky follow that. And when Chomsky talks about Russia or whatever, he's not in reality. As for Thomas Sowell, I like him a lot. I think he's great. I think Thomas Sowell understands the reality of security and defense, and that makes a lot of people uncomfortable, especially in the anarcho-capitalist utopian world, who think that security is not a important feature, or it's just sort of going to naturally find itself. Um, Look, whether you like it or not, national defense is a core function of government. When I interviewed Remigius Shimashis recently, you can find the interview. He said it's such an own goal, it's such a self-own to be a libertarian and say something like, "Well, we shouldn't contribute to Ukraine's security. We should have more food stamps for Americans." You're like, "Okay, so you're a socialist then?" I mean, if it's a core function of government, even if it is involving yourself in a base or a conflict abroad, which could bring further, uh, what's the word, buffer safety to your home country, then history shows that that actually is more of a good thing than a bad thing. So Soul is absolutely right there. And Soul is just a powerhouse. He's written so many books on so many topics. Uh, Anything you read by Soul, I think, is going to be interesting and fascinating. Uh, I would read, if I were you, have you read Commanding Heights? Commanding Heights by Daniel Yergin. Commanding Heights. This is a now 25-year-old project, but his book and his PBS, they did a PBS special as well. You can get this on documentary. And I would say if you want to get the all-encompassing 0 to 60 view of economics in the 20th century, moving into the 21st, and they cover globalization. They talk about some of the risks of globalization, and they talk about Russian oligarchs, and they talk about the challenges that Russia had in the 90s of going from communist to capitalist, which again, they never have made it. Russia just is a failed state. They have failed at going from communist to capitalist. And anyone who wants to defend Russia just doesn't know what they're talking about, because ask me why Latvia, Lithuania, Estonia, all the former satellites, Poland, the Czechs, the Slovaks, the Romanians, the Hungarians, even. Hungarians are sliding back, as we know. But ask me why we're all generally well ahead of the EU average in most metrics, and Russia is at basement bottom. It's because they don't have a capitalist system. Gulag Archipelago, yeah, by Solzhenitsyn, is very, very good. Very good. Solzhenitsyn is, he was like one of the first main Russian dissidents. that made it out. Him along with the ballerina, the ballet guy. What's the word for a male ballerina? Uh, I forget that guy's name too. Bad with names today. But the guy that he I think he ran away in Canada and eventually moved to the United States. A lot of Soviet dissidents, and like David Friedman says, look at where people go with their feet. All right, they're not going to want to stay in capitalist, in communist, corrupt, socialist dictatorships. They're going to want to move to where your speech is free and your capital is free. So, thank you, Gio. Very good questions today. So again, these are the countries, these are the tariffs, these are the rates. They're way lower than what Trump himself is doing. He's even putting, penguins. This was a funny one. I'm sure you guys saw this. The herd in McDonald Islands, Australia. I have a list of a database of all the territories and countries. So I have this. There's like no people there, but there is a small amount of, machinery that somehow comes in, and they thought that they would tariff. But there are other countries who have like basically nothing, and they still put the 10% tariff on. You have French territory. Again, this is Australia. So he's tariffed Australia and the McDonald and Herd Islands. It's like tariffing, New York and America. Just on different levels, it doesn't even make sense. It's like tariffing Greenland and Denmark. Did he do Greenland? I actually didn't see if he did or not. Let me know if anybody knows if he has done Greenland. But these things are just way out of proportion. They're way out of whack. And it's nothing like, you can just see right here with China. China's like half of the trade balance. Okay, so going back here, China is half of this number, I believe, something like 400 and some billion. So if China is half of this number, and he's starting out with 34% on China, then he's nowhere near his target trade weighted balance, which is still an insane number of 11%. 11%. And even dividing it by 2 is a funny sort of metric. If it's just your imports, why would you divide by 2? But this is their calculation. And, the United States has gone 50 years with a trade balance this way, but GDP has gone up. Standard of living has gone up. Yes, the debt goes up as well. And you don't have to tell me that's problematic, but that's a function of many things. It's a function of, the Triffin dilemma. It's a function of foreigners wanting dollars. That's a function of the United States wanting to be the center of the global economy, having the dollar as the global reserve currency, but also the global unit of account. There's a lot of things that go into to that. I have my doubts, just like I have my doubts about the foreign policy plans, which seem to only appease Russia. And by the way, as we saw, oddly, even though he is tariffing China, he is not tariffing Russia, Belarus, Cuba, North Korea. So it's the worst enemies of the United States that Donald Trump wants to cozy up to. I like what John Bolton says. John Bolton says that he thinks that if he can be friends with these leaders, then that means the United States has a good relationship with these countries. So he thinks that if he can be friends with Putin, the United States will have a good relationship with Russia. I'm just waiting to see all of the capital flood back in to the private property paradise that is Russia. Take that risk, invest in that oil rig, collect those dividends, see how it goes for you in Russia. Don't listen to Russia's neighbors. Don't listen to the Finns, the Balts, the Poles. Don't listen to us. Go ahead and bail out Russia for their genocidal, tyrannical war, against Ukraine, and hopefully not further than Ukraine. Although, again, I say that hopefully knowing full well that Ukraine is fighting instead of us right now. It's going to be a battle, not only for the worst rendition of a nomination for Nobel Prize in Economics, but also for the Nobel Peace Prize, because everybody from the beginning was saying that Trump is either going to put the screws on Ukraine, take away aid, or put the screws on Russia, say, I'm going to give Ukraine everything we got. He obviously has not done the latter at all. He's going for the pure appeasement, pure Chamberlain route. People can try to spin that any way they want. This is not how history works. History has told us that this is just not going to be a kind result to the people in the middle. And, if it's Thucydides and power politics, the strong do what they will, the weak do what they can. That's certainly what Trump is going for here. He's going for that with the trade war. I think you're going to find, as I said at the beginning of this conversation, the United States is at the risk of running out of ammo, running out of cards to play, to where other countries who are powerful, all right, and other groups of countries, that is the European Union, for example, all right, which has always been the best ally of America, if you're going to push them away, well, they're going to look to other places. They're going to not feel confident in how a trade relationship would work with this country if, again, you could change your mind on a whim or come back 2 weeks later and say, no, you want this, you don't want that. Markets like certainty. When you say you're going to tariff penguins and you put, 50% tariff on Lesotho, 48% on Laos, 34% on China. And Taiwan is just, the fact that he did Taiwan. By the way, this is another one. Is Taiwan a country now? Full list of reciprocal tariffs by country. So Taiwan is a country. We got the Penguin Islands of McDonald and Hurd, which are also apparently a country, even though they're a polity of Australia. Is Taiwan a country? Has the United States just recognized Taiwan as a country? The clown show could not continue to. I shouldn't even say anything. We know that the clown show will continue. Every day gets more absurd. This is what it's going to come down to. Again, GDP is not a silver bullet. It's a way to categorize, classify, but it's not in and of itself a profit center. Yes, if GDP is higher, you could tax more. That's all you can say. But it's not like a pull a lever. Okay, let's make the trade. Let's tax the trade balance. Like just automatically tax the trade balance, and then all of a sudden, the United States debt and deficit goes away. No, you're probably going to get way less imports and then way less inputs for your own GDP of private consumption, again, which 2/3 of that is private consumption. This is, I don't want to say the only, but this is a very good metric. GNP divided by GDP. This is basically American power, American benefit of GDP versus foreign benefit of American GDP. All right. And if it's over 1, it's better for America. You can talk all you want about inflation. You can talk all you want about the dollar and manipulation of markets and everything. But, it's just one calculation. It's just one way to look at this. Very possible that this sinks under 100%. But these are aircraft carrier-like things. They move so slow anyway. It could take a year for this to sink under. And then, I don't know, war in Europe. So Europe has to fend for itself because the United States isn't going to come help. So maybe the United States vis-a-vis Europe will do better. I don't know. I mean, the economy is it's impossible to tinker in the way that they're trying to tinker it with this number and with the tariffs. Uh, but basically, we have a situation now where the Trump administration, according to Howard Lutnick, who knows better, says that they have an army of PhD economists who agree with them and are ready for them to implement these policies, when every single economist outside of the world knows that tariff trade wars end in worse problems for the economy. And they actually, as Rand Paul has been saying, and very interesting that they're now forming this bloc to block the Canadian tariffs. It's bad policy. You know, Smoot-Hawley caused the Republicans to be out of power for like 60 years or something, he said. I'm not sure if that's just president or a combination of president and Congress, because I feel like there was another. I mean, there were a lot of Democrats in, but I mean, Nixon was Republican. Obviously, Johnson, Kennedy were Democrats. Truman, Roosevelt. But anyway, the point is, it seems to be bad policy for Republicans to interject tariffs into the economy. It happened nearly 100 years ago, and they're trying it again. I guess we'll stop there. Look for GNP falling below GDP. That would be bad for Americans relative to American GDP. And this is the trade weighted balance, or in other words, if you divide it by 2, it's Trump's tariff rate that he's targeting is a global targeted rate of 11% on imports. 11%. That's what he's targeting by using all of these numbers and huge numbers. And of course, he wants to. Sorry, I'll shut it down after this, just because unless anybody has any other questions, that's all I had to show today. But he wants to have you grovel. Obviously, this is where he's. Everybody knows Trump. Trump loves yes men. His whole cabinet is a bunch of yes men. I told my friends, my libertarian friends, that Trump wasn't going to fire anybody after the Signalgate debacle. We'll see if Waltz gets fired, but as far as I understand, he's not yet. And he was in like 20 other chats, just hilarious. Started 20 other chats, Signal chats, outside of official comms. He wants every single leader to come groveling to him and to make carve-outs and exemptions and do things his way. Okay, there we go. There's the European Union, 20%. He wants everybody to do it because obviously the European Union's going to respond with their absurd tariffs themselves. I mean, these are just absurd numbers. They have nothing to do with reality. Nothing to do with reality. And nothing to do with the quality of American life. It's just a made-up figure based on the trade imbalance, which is just one component of GDP. So that's the playbook. He's enemies with his friends, and he's friends with his foes. If it's not clear to people yet, everybody should understand that's what it is. Taiwan is also now a country, apparently. Please keep that in mind. Taiwan is a country. Thank you, Gio. I will. That is a good idea. Is that from, I heard Lex Friedman and Douglas Murray actually talking about that. They don't get invited to parties. I'm good. Used to party much more, but I'm a family man now and don't have much time anyway. So I'm happy to be here with you guys, chatting about this stuff. And I will try to get some reading lists. Mises.org has a lot of great free stuff. I'm sure you've seen that. the problem with the free market folks there, unfortunately, is a lot of them are there's a big racist streak, and you can find a lot of these people that contributed to Mises.org are Holocaust deniers. Just search for that, and you'll find papers on that. So that's a big problem, and they also just fail to understand general security in the world. It's not that the United States has to be the world's policeman, but it is in the United States' interest to have a good, strong relationship with allies. It does not mean that there aren't some good nuggets of truth in some of the things that Trump has said. Look, Eastern Europe has paid their fair share of defense spending according to the NATO 2% guideline for years, for decades. Western Europe has not. The only countries that have are Greece and Great Britain. Greece has its own problems always with Turkey, so they pay. Greece and Turkey were brought into the alliance together, 50 years ago, over 50 years ago, to closer to 80 years ago, to sort of mitigate that factor. And, that is not taken seriously by enough Western European countries. And Trump has actually lit a fire under their asses, which is, on the one hand, very good. But on the other hand, because the way that he's doing it has basically, he's shown some scorn for all countries as far as we can tell. He's not standing up to a dictator with no rule of law or property rights in his country, an absolute mafia, dictator, kleptocratic state. He's standing up for them and their interests and their rights in international law, and sending these guys like Witkoff to talk to Tucker Carlson, who they can't even name the five. He can't even name the 5 administrative regions of Ukraine that are partially occupied by Russia. Of course, they have all of Crimea, but he said those 4 regions, Crimea, Donbass. It's not even. It's unbelievable that this is the first of all, he's the Middle Eastern envoy to Russia. Now he is the Ukrainian envoy because Keith Kellogg was viewed as too favorable to Ukraine in the eyes of the Russians. So they brought in Witkoff to take care of Ukraine as well. And he confuses, or simply just doesn't know, that Donbass isn't a region. It's not a province. It's just it's just an area. It's a general area of eastern Ukraine. He didn't know Luhansk, Donetsk, Zaporizhia, and Kherson. None of those 4 regions, by the way, are fully occupied by Russia, and they are demanding that. And then, of course, the other thing, which is just baffling, is Russia, as part of this ceasefire, which is not a ceasefire is not a peace deal. All right, look at Anders Nielsen is a great YouTube channel. Anders Nielsen, he's a Danish military analyst. He talk about that more, about how just a ceasefire is not a peace deal, and Trump's going for peace at any cost. But the key point, a key point that Russia is demanding, which Ukraine will never agree to, is to emasculate the army, take it down to like 20,000 people. Ukraine has the biggest army in Europe right now, except for Russia. Both are, Russia's over 1 million, Ukraine's at 1 million. And he wants, Russia, Putin, wants Ukraine to not have any foreign help, not have any foreign assistance at all. This coming from a country that attacks Ukraine with North Korean drones every night, 100 to 200 North Korean drones every night, has Chinese kit that has been sent to them, evading sanctions, but again, there's nothing we can do. They have a special relationship now. And North Korean soldiers. So Russia, the second greatest army in the world, with Iranian drones, Chinese kit, and North Korean soldiers, how rich, is demanding that Ukraine give up its sovereignty and not have any foreign help. The absurdities will just continue to spiral out of control. And that's a very dangerous time. It's a very dangerous time. I can't. I know you guys probably don't like to hear it, but it's we are in the most vulnerable part of the world right now, which needs the most support for America, and I'm not sure we're going to get it. I can do a more military one too, if you guys want to see again soon. But Cypri should be coming out with the latest military data in any day now. I haven't seen it published, but they do a little bit better job of going through trying to find out what's actually military spend, what's not. So it's a very good organization, Stockholm Institute for Peace, and I would recommend check their website out. Good comments today, Gio. Thank you. Nobel Prize in Economy for Trump, rivaling his nomination for peace. This is what he's targeting. He's trying to get one half of this number in net tariffs, 11%. The world balance is 2.6%. That's an old number, but whatever, 3%, I don't know. It's not 11%. It's not a factor of 4 higher. And just going to the United States, by the way, not a worldwide number, but just United States import tariffs. So that's what they're going for. All right, guys. Let me know if you need anything else or you'd like me to chart anything else. Thank you for watching. Have a good weekend.